Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. Today I've asked Gerard Dyson, Managing Director of Spectur. Spectur's ASX code is SP3. Now, Spectur use technology and AI to make communities safer. And we all know there's a lot of nervousness these days with crime going up and various things happening. I love what Spectur are doing and I love their growth trajectory. So, Gerard, thanks for coming back onto Small Caps. Great to see you.
Great to see you too, Kerry. Always a pleasure.
Before we get stuck into what's happened since I last spoke to you, just give our community a brief overview of who are Spectur.
Yeah, as you introduced, we're a business that's very focused on making communities safer. I think we're also making them a little bit smarter and more sustainable as well with some of the new work that we're doing. So the place that we focus is on the outdoors. So we go into places where it's not easy to keep people or power cables or wired internet. So we're going in places that are, uncabled and unpeopled, and that can be temporary. So right in the middle of the city where it's temporary, or it could be in the outback and everywhere in between.
A good place to do that would be Australia, because we have so many remote communities, et cetera, et cetera. Plus, as I talk to you today, I can hear a building site on the other side of the
world. We could be there.
Really?
Yeah, absolutely. And so, one of the things we're famous for is doing security. Construction sites is a big place that we do that, but we also provide safety and warning systems at beaches. We're the number one player on beach safety. We stop illegal dumping, so it's environmental protection. And then increasingly, we're providing a lot of smart city applications, whether it's people counting, or whether it's number plate recognition, or it's visualization of complex data of different weather data, for example, or coastal state and analytics, and presenting that back to customers. So we are very much around that sensing, thinking, and acting in places that you could never do that in the past.
It just brings to mind, so I have to say, it just brings to mind, Big Brother is watching, and now he doesn't need a lead or a cable.
Yes, well, I think if you think of it almost like a robot, but it doesn't really have legs. They're fairly well. You can put them on wheels, so that's not entirely correct. But these, we perform very specific applications. But you're right; it's increasingly clever because we're using artificial intelligence both on the devices and connected into the cloud. We're using a range of different sensors, whether they're Bureau of Meteorology sensors or our own sensors or cameras. And then we're taking actions, and that can be calling a security guard, turning on a light, opening up a box, sending you an email, activating some electronic system. And that, that's kind of sensing, thinking, and action. That's what people do, but we do it at a much more, focus level and places that people don't want to be.
I want to talk about the growth of the company since I last spoke to you. But before I do that, in terms of growth, is it more big customer bases like, I don't know, big building developers, or is it more retail? Where are you seeing the growth? Because we talk about security at the home. Are you looking at the big companies or more retail?
No, we definitely focus. We're a B2B and a B2G company, and increasingly our business is with larger, more institutional customers that value the differentiated offering that we have. And so our order size has increased on average, and we still service smaller customers as well, but the focus of our sales has been with larger government, larger institutions. We recently did an increase by $1 million in a contract with a customer, a major utility. So that sort of gives you a feel for major utilities. We've got a major construction project in the southwest that's worth, hundreds of thousands of dollars, which we've recently been awarded. So there's some, substantial customers, big alliances, big constructors, big utilities, and government. I didn't say big government because that sounds bad.
Yeah, that does sound bad. Well, talk to us about some of the numbers, since, what are the numbers looking like for as we come into 23? I'm talking to you in March 23.
Yeah, so all of the key metrics were moving in the right direction. We had a cash flow positive quarter in Q2, where I think our operating cash was up about $280,000 for the quarter. Our pipeline is up in terms of our sales, both weighted and unweighted pipeline. I believe we're north of $10 million in our unweighted pipeline at the moment. We have done 26% revenue growth in the first half of the year, and these the last couple of months have been continuing that trajectory. We've had record sales as well. Sales are up, I think, 30% on the prior period as well. So sales, revenue, pipeline, cash, every metric is moving in the right direction and underpinning growth into the future. And then to add on top of that, we completed an acquisition in February, which brings more revenue and more pipeline and more sales and more capability and a larger technology mode as well. So I don't know how many boxes you could fit on the screen. We'd fill them all up.
Okay. Well, you just mentioned an acquisition, which I find always interesting.
Yes.
Can you talk to us about that acquisition and also why you decided to do that?
Yeah, I mean, well, we've had a very clear view on our strategic roadmap for the last few years, and anyone who's followed the story will notice it's fairly consistent. What we found, we've had looked at other acquisitions in the past, and I think, as our chair once said, we've kissed a lot of frogs, but we haven't actually, we've dated many and married none. But this time we found 3CT really ticked so many boxes for us in terms of their ability to help us accelerate our strategy, certainly from a tech stack point of view, accelerate our revenue, accelerate our process towards being consistently cash flow positive. And it was just a very, very good match for us at a very, very good price as well. So we're integrating them now.
I was just about to ask that. How do you integrate? What were they doing? Where are they based? How do you integrate?
Yeah. So they're an Australian-based company as well, predominantly on the East Coast. Their technology involves predominantly data visualization, so they're very cloud-centric. They have a really good way to present both camera data and sensor data at the same time on the same screen in real time. And that's tricky. Very few people have done that. We plan to build that. We don't have to build it now because we've got it. They also have an array of camera systems up and down the East Coast that they use for they gather data from, and an array of customers. And they also were the other people that did emergency response beacons on the East Coast. So now we can come back to saying we're the only people that do that because we bought the other person that did it too. And that really gives us a great footprint, for example, in Queensland, where they were present with Surf Life Saving Queensland, we were Surf Life Saving WA, and with Surf Life Saving New South Wales, and moving further south too. So just, again, market presence, tech stack, capability of individuals, existing revenue and customers. We've bought more than $1 million of recurring revenue. I mean, this is tremendous stuff, really. And
was it a cash-only acquisition, or was it cash and shares?
So ostensibly, it was 250,000 of scrip at the 30-day VWAP prior to the day, and then another 600,000 of cash. Now, but it should be noted that we bought cash with the organisation. At face value, about $160,000 of cash came across with the organisation. So net cash position was more like 440. And then there's also a whole bunch of highly liquid other assets in the organisation that we're variably looking at if and how and when we might liquidate them, which could bring, maybe another 100 or more $1,000 of cash straight back too. So net position probably closer to $600,000 overall deal, of which 250 was scrip. So didn't drain on our cash. We didn't have to go and raise any money. We didn't have to go and get any more debt. We didn't have to do any of those things. And that platform and that revenue, we believe, brings forward our cash flow positive date closer.
Because that was going to be my next. There's an acquisition which has brought some cash into the business. Yes, you've had to pay a little bit of cash as well, but you didn't have to go to market, because I think that's kind of important as well, isn't it? The dilution. Shareholders always sometimes worry about that sort of thing. Gerard, are you focused on growing that revenue stream so that you don't have to go back to market?
Yeah, absolutely. Our focus is, a lot of people, you have these conversations, you talk about your cash burn, they say, we're in growth mode. And growth mode equals burning cash like drunken sailors. We are in a mode of how do we get to profitability through the lowest hanging fruit as quickly as we possibly can, so we can, really demonstrate and prove to the market. Now, I think we've proved in lots of ways, but I think us consistently paying our way is a great way to prove to the market the validity of the business. Now, we don't want to stop the growth while we're doing that. So it's a bit of a balancing act, but we are absolutely improving the underlying profitability of the organisation. We're absolutely improving reducing the cash burn. When you put aside buying a company, we're just finishing off rolling out an ERP, and anyone who's done that knows how much fun that is. There's been a couple of one-off things that we've had to do. They're behind us, or almost completely, and underlying performance is moving towards that beautiful generating cash mode. So that's where our focus is.
Last time we spoke, you talked about the need to grow and become scalable. This acquisition opens up the East Coast market for you, very much so, I assume. Is your focus still in Australia to get that growth and that revenue, or are you? Because we are it's a tricky time at the moment. Yeah. As I speak to you, there's bank collapses in the US, but I suspect that the market that you're in is only going to grow. It's not going to tighten up. But my question is, do you stay focused in Australia, or are you going to look at other markets?
So I did a market entry strategy last half of the year, going into the US, including I visited the US and did some research there. And that market is very attractive. It's largely underserved. Our technology is quite unique even there. But to get into the US is going to take real focus and money. And right now there is so much low-hanging fruit inside Australia and New Zealand in the geographies that we're in today. And when you add in the additional capabilities that we've brought through 3CT, I believe the lowest hanging fruit for us is to not go anywhere right now. Let's spend at least the next 12 months focusing on really trying to deliver as much value out of the acquisition and the synergies, both cost and revenue, that we can get from it, and really focus on getting profitable as the first priority, recognizing that maybe that slows. Well, I think we're going to grow like Topsy still, but instead of growing tenfold every year, we're growing at a more manageable rate, and it's a rate that means we don't have to keep going back to the market for more money. So I think what that does is it's effectively a low-hanging fruit strategy, which means no chasing shiny objects in the US right now. We've had a good look. We know what's involved in it. And right now there's ways that'll improve our profitability and our cash return sooner than doing that.
That's and I think shareholders would be pretty happy to hear that just at the moment. You also last time we spoke, you'd done a deal with a big telco. Is that grow again? I just want to see, is that?
Yeah, absolutely. I mean, we're very proud of that deal. We've just recently got a extension in the statement of works by another $1 million. So that's more than $2 million. This particular customer, more than 100 systems installed. They're going to more than double that. So it'll be, heading up towards, 250 with just a single customer. So obviously that's a validation of us as a business. When you have tier one customers that are, you have been using you for a number of years, they've obviously got a return enough so that they, double the size of their commitment. And, that's a great message. In fact, it's the best advertising in the world is when you can say, our customers liked us so much, they thought that they would just double their, exposure to us because we make a difference. And, so obviously we're quite pleased about that.
Yeah. And I think that when you're talking about companies like that, they don't do this lightly. They actually do a lot of not only due diligence, but I'm sure it's not easy, but once they know that the system works, then you're underway. Do you think that sector is a good growth sector for Spectur going forward?
Yeah, I mean, absolutely. I mean, we've over the last few years have really focused our strategy on government and utilities, not because we thought it was easy. We actually thought it was difficult. The cost of acquisition of customers can be high, and they can be difficult to do business with, both contractually and legally. There's frameworks that they require because of their nature. And that really excludes a lot of people that don't have the maturity to be able to do business at this particular level. But that's something where, Spectur has the depth in its executive and its systems and its processes to be able to support institutional level customers. And so that's where we have moved increasingly, and it is a thin edge of that wedge. I mean, we've made, I think modest penetration into one large utility, and we're scritching around on. Actually, we're with a lot of utilities, but this is one where we've made a pretty substantial, progress. There's so many more where we can make a really positive difference. I said where I come back to is this is a market that is largely untapped. The market itself is growing enormously. We don't have to take share from anyone else. It's we're taking share from do nothing.
So much? Why is it growing so much?
Well, I think people are it's increasingly difficult to get people. I don't know if you've noticed, but there's a real overemployment issue you could almost see. And so getting people to be in remote locations or in different places is increasingly difficult and really expensive. And then we've got crime issues. Crimes against property are going up. Crimes against persons, unfortunately, have gone up a bit too lately. And some assets are very vulnerable. And so you've got a lot of different metrics that are driving people saying, I need more automation. I need to be able to use more AI. I've only got this many people. I can't have them everywhere. How do I leverage my people by using smart technology? And before you were constrained by a power cable. I can't do anything where I can't plug it in the wall. But now, certainly with our advanced lithium solar technology and our really, smart electronics, is we're able to do things that no one else can do in places where you can't get a power cable.
You just said, Gerard, that no one else can do.
Yeah.
Are you protected with your IP to the extent that people can't do what you can do? Because I think, what I was about to say is this is a market that is growing, and I want to talk about the growth, but can't somebody else, and I think I asked you this last time, but I just want to go back to it. Yeah. Can't somebody come in and eat your lunch?
Well, so let me answer that in a couple of ways. I love that John F. Kennedy, we didn't go to the moon because it was easy. We went because it was hard. What we do is we do stuff that's very difficult to do. So when you only have a small amount of power that's unreliable from the sun, you're operating from a very small amount of energy. And then when you have to use the 4G network or the 3G or even a satellite, you've got frugal amounts of power, and that's very difficult. And that world today is 5%. Everything else, 95%, you can plug in the power and you can have as much power as you want. So all the big players play where the volume is. Because if you recognize the innovator's dilemma, once they get big, they can only eat big things. This is a very difficult place to operate, and it's a small volume. But when you look at it across the world, it's a huge volume. And so we operate there, and we've got 30 million hours of trialing and operating more than 2,700 systems. It's more than that when you add up the ones in our history as well that have been out there. And we have built unique hardware, unique electronics, unique firmware, edgeware, cloud software. And we've built that up based on that 30 million hours of experience. So even if someone else wanted to do it, they need to have expertise in electronics, in manufacturing, in sourcing, in firmware and edge and cloud. And so that's a very finite number of people. Other people that do solar powered security, they buy their stuff from China or Europe and stick it on a pole. They're not writing software. They're not doing electronics. They're not building mechanical housings. They're welding together a pole and sticking stuff on it. Right. There's no one else that looks like us. And if Panasonic wanted to do it, well, they could, commit enough people for enough years and they could get there. But what we're doing is we're continuing to move our technology forward. We're continuing to move further and further, and people are in our ecosystem, and we're able to bring them in, and it's easy for them to add in to plug us into other technology, or so their switching costs are becoming higher because they're committed into our ecosystem, but we're not excluding them from bringing in their other technology as well. So we're open, we're flexible, we're a platform, and as it's like trying to get you to switch your phone. I've got all my phones on my phone, it's too hard. I'll just stay with your ecosystem, and that's that's certainly where we want to be.
That was a great example, because you're so right. My ecosystem is here. I'm not changing it, even though someone says to me, but this is such a better phone or a computer or whatever. I'm like, but this is what I know. And I'm there.
And that's where we're going with this, Kerry. If you can imagine, you've got your phone, and it's not just a phone now. It's actually counting people. and it's measuring all your statistics, and it's sending you an alert if the weather's bad, and it's doing security, and it's capturing time-lapse footage, and then someone says, oh, I've got a great phone for you here. It makes good calls. It's cheap. Like, that doesn't do all these things here. And so that's what we're doing, is we're building out the range of things our technology can do, that share of wallet that comes with it. And that just locks customers in to the ecosystem in a positive way. Is like, if I lose all this functionality if I go to something else.
Right.
And, and this is all about first mover, volume, getting people on board in their ecosystem. They like it. It's simple. It's easy. I can plug in third parties into this. Why would I go anywhere else?
Okay. Our audience out there is very much an audience that's looking for opportunity. And I'm looking, your share price from when we last spoke hasn't moved very much. Market cap still quite small. What do you give us your views on why the future looks bright for Spectur?
Well, if you look over, we've been pretty flat on average for over the last 6 or 7 or 8 months. The business that we have today is a much better business than it was even 6 or 7 months ago. We've added in the acquisition, which has really built out the tech stack around our ability to do much more sophisticated artificial intelligence through third parties and sensing. We've built our pipeline. We've got the revenue. We've got more sales we've just been landing. So the future financial trajectory is very strong. All the metrics are good. Now, am I telling that story well enough? I don't know. I'm working on it. I've also got to operate the business too. So it's a bit of a balance between advocating our story and doing that. And also, there's a bit of a market uncertainty, particularly for the small end of the market, where people see more risk and people are less risk averse. But I think right now it's a very exciting time to be in Spectur. I think we've got a huge opportunity in front of us on a system that has more than 600 customers, including tier ones. It's got customers that are coming back for more. I mean, we're at that inflection point right now.
Okay.
And I think now's the time. People will look back and say, wish I got into Spectur in March in 2023. That was when it all began. Well, it's not when it all began, but we'll be an overnight success that's taken 10 years. Yeah. And I think right now, I don't think I've been so bullish.
Well, I can sense your excitement. Any more acquisitions on the horizon? Or can't you talk about that? No?
Well, so, I mean, our strategy is not let's just buy a whole lot of stuff and hope we can fool someone. We're buying things, we're integrating them, we're getting the value from it, and we're digesting it before we're not trying to do 7 things at the same time, which that just burns up cash and it means you don't realize the value. We're really finite as an organization. We're really mindful about squeezing every dollar of value out of every asset that we have right now before we go and look for another one. So that might be less exciting than, we're going to buy another one next month, and that we're not doing that. We're not in that situation right now. How do we preserve our cash? How do we make some cash? How do we get to profitability sooner? What are the stepping stones of the lowest hanging fruit that get us to that position? That's what we're doing right now.
Okay, well, we're running out of time right now, so I'm going to wrap it up and ask you to wrap it up, if you like, Gerard, by giving me 3 reasons why you think our audience out there needs to sit up and take notice of ASX SP3 right now.
Very large, underserved and underdeveloped market. So the market opportunity is very huge. Spectur has a unique tech moat or platform or differentiated offering. There's no one that looks like us at the moment, and it's difficult to do. You need a whole range of different skill sets to get into that space, and we've kind of grabbed the first mover position. So great tech moat, and look at all the metrics of where the business is right now. Sales are up, revenue is up, cash flow positive quarter last year, pipeline is big. So you just, in the short, medium, like immediate, short, medium, and longer term, everything is pointing in the right direction. And
what can I say, ladies and gentlemen? Gerard Dyson is the managing director. And first of all, I think he's very, very mindful of where funds are spent, and he makes sure that the trajectory for growth is there. And secondly, I can sense in his voice the excitement of where the future lies. So, Gerard, let's talk again. Let's not leave it for 7 months, because it sounds like you are very busy. So come back and give the market an update in 3 months' time, so we can see where you're going. But I wish you all the best and love your enthusiasm, and all the best for the growth of Spectur in the future.
Thanks very much, Kerry. Always a pleasure. Talk again soon.